Hey, everybody, it's Alex with Reportify Media, and I'm here with Angelo Giuliano from Hong Kong. Great to have you again on this program. And wow, the timing of this conversation is right on the money. I remember our last conversation, we talked in depth about commodities, what was going to happen in the world, the geopolitical tension all over from Iran to the Middle East, all the way around to Venezuela when we last spoke. And lo and behold, we are looking at a market, especially in gold and silver, that is going parabolic. What are your thoughts on that?
Well, it's interesting, Alex. As you know, I cover geopolitics, China. I'm China specialist, but also everything that is happening around the world, Iran, this multipolar world, and also Venezuela. So the talk of the day right now, when it comes to geopolitics, is Iran and Venezuela. And that I absolutely understand that, there's a huge shift happening. But I think, for me, I think the story is not there. I think the story right now is on the commodities, it's gold and silver, because you know what? Maybe the US might win a few wars, battles. They're not even wars, they're battles here and there. In Venezuela, in Iran. But China is winning a big war, and it's hitting the US where it hurts the most. Where is it? On the wallet. Right now, physically, what is happening is you have a huge shift of physical gold and silver, which is going towards China, and especially silver. As you know, there's a huge discrepancy here. It hasn't happened much in history. You have the paper silver, which is I owe you, but you don't know what is behind that.
Right.
And it's completely fake. It's being completely faked and completely manipulated. Silver
digitalized
derivatives. And so basically the same silver is being used like 100 times. They're using that paper against that silver. Now, what China has done, they're putting a premium. The market in China, which is based on actually physical silver, and especially for one part is the saving. There's two applications as opposed to gold. Gold is mainly for saving. There's a storage value. Silver has two applications. One is industrial and one is storage value. But what happened in China is that because you have lots of industries there, there's utilization in industry. So that market is basically mainly a physical market. Now you have a premium. So if the silver in China is sold at a higher prices than in the US, what happens is that you have a physical, you're doing arbitrage. Basically, why would I sell my silver in the US when I can get a premium in China? So you have a huge shift. The physical is all going towards China. In addition to that, China has a new law that says basically you need a license. They made it impossible for Chinese exporters to export outside. And also there's no interest in selling outside because the price is lower. Now China controls 70% of the refinery of silver. Now what happens is that China is right now starving the rest of the world when it comes to silver because the price is so high. So imagine now, silver is an application, is industry, but also military industrial complex. Imagine now, the US is going to spend $1.5 trillion in its military industry, but it starts to have huge shortages in silver. And when you look at history, there's sorry, but this is so important topic. This is a repetition of what we lived in through history. I'm going to give you 3 dates, including this one. First date is when there was Opium War, China would actually sell so much silver, ceramics, silk to the British Empire. What happened with the British Empire was that all its reserve of silver was emptied by China. So imagine there was a transfer of silver back then. Now go back to 1934, the US, they started massively buying silver. What happened to China is that basically, a lot of silver went from China to the US, and it was very bad for Chinese economy, extremely bad. It was a huge contraction of GDP because the currency, Chinese currency was pegged to the silver, and they became, was very hard to be competitive. So you had a shift of physical silver in 1934. Now what is happening is the reverse from 1934. You have all the silver that is going from the Western world to China. And I think maybe for me right now, the big story, even though what is happening in Iran and Venezuela are huge, but that single story is don't touch it enough, because this is so essential. And this is part of what the huge shift that are happening on the currency, de-dollarization. And I think China, even though China is not winning on the battle, kinetic war, but China is winning on that war, which is currency, de-dollarization, and this new framework, which is based on those currency, which will be backed by commodities, oil, silver, gold, and so on. And this is happening slowly with BRICS, but it's not sexy for commentators that rather spend time on of course important stuff which is related to Venezuela and Iran. Sorry, it was a long one, but I think, I mean, what's your input on that, Alex? I think we share. When it comes
we do share it. And we've been talking about gold and silver for the last couple of years that we've been chatting on programs together. But, I look at it from the derivative side on the market here. There is a problem here. And this trade, as I call it, just like with anything, when there is a massive run in something, this trade comes out somewhere else. Now, it may not show up in silver. Of course, the short squeeze is coming. It's here. You can see it this morning as well again. And as this squeeze goes higher and higher and higher, margin calls come in and banks get liquidated. Now, those trades are going to come out.
Just one thing.
Tell me.
For the purpose of the audience, can you please explain the short squeeze? Because it's an extremely important element.
Sure.
And this is going to drive us towards the impact on the banks and potentially some big banks going under. This is really important for our audience. Explain what is a short squeeze.
So basically, a short squeeze is, let's say you said, you know what, Alex, I would like to buy, I'm going to take this bar of gold and today I'm really happy at selling it for, I don't know, $80 an ounce. I'm okay to sell it. But I'm going to pay you a little bit of a premium. And in a week or 2 weeks time, I'm going to return it back to you. And, if I sold it for 80 and I'm giving it back to you for 75, I've made $5 on it. Okay. But the issue is what's happening is most derivatives in the US markets are pretty much manipulated, I would say, by some of the largest banks in the world. If you look at the banking balance sheets, you're going to see there's a derivatives department. It's usually very clandestine, very secretive. It's in the bank. It makes the bank a lot of money, and sometimes it busts the bank. Just ask Barings Bank in the United Kingdom what happened to them when they were to the wall because of positions that were either short. So what I'm getting at here is people will sell something they don't own, hoping that the price will fall to buy back, to deliver it back. The problem is this has gone the other way. And the market was so used to battering down silver, battering down gold, battering down oil. I mean, you think oil producers are making money on oil right now? And got to remember, oil didn't suffer massive inflation like the housing market, wood, cattle, soybeans. All of these are also derivatives. Natural gas, these have been all battered down. And why they've been battered down is because these banks are shorting these positions, saying, this is easy money. We'll short it. The price won't move. It'll go down a bit. We get a little bit of a premium for it. It's a complex. The derivative market's a little bit complex. But to make it easy, is bank is saying that they're acting as kind of like insurance policy.
Insurance, absolutely. That's an insurance.
And in the end, when they have to deliver or they're told to deliver, they can't. Now, right now, natural gas, look at it, UNG. It's an ETF for natural gas, battered. Why is it battered? Some of these refineries, that have actually suffered massive explosions in the Ukraine that actually helped deliver some of this to Europe. It hasn't met the headlines yet, but it's coming. So my feeling is silver has a long way to go. there's going to be some bank failures. When that happens, they're going to then look, where is this trade going to come out? Where do these positions need to be liquidated? Now, can you imagine a bank having a multi-billion-dollar position short on other things that we'll call it the gravy train, and they have to buy back these positions to clear up margin to cover their short position? So silver is going to expose a few banks. I'm hearing rumors in Europe that one bank, these are just rumors, speculation. It's not a solicitation to buy or sell on any securities. But all I'm saying is we're hearing rumors that a bank is about to go to the wall, and liquidity has been needed. You could see it. Silver does not act like this. Gold does not react like this for no reason. My second part, and I know this is a little bit long-winded, is look at what the Trump administration has done with one of their public companies. They have got heavily into the crypto market. And what have they done? Well, Mr. Trump himself has pardoned a lot of the people that were in jail for criminal action. CZ from Binance is walking free out in public. Bitfinex and BitMEX, I can't remember if I've quoted that right. The founders were in jail for fraud, released. So my feeling here, and now today's announcement of the Department of Justice are investigating the Fed chair for criminal prosecution. I'm going to hand it over to you, because before we hit the record button today, you told me where this was going. I want to hear it from you. Tell the viewers.
Well, I think there are factions within the elites, the oligarchy in the US, and probably we can tie this to, well, there's of course a bit of speculation. We don't have the full information here, but there are factions within the oligarchy in the US, and I think the faction we have here now, it's tied to Peter Thiel, the PayPal mafia, which is heavily invested to the crypto market. You can see the background. They all have their money, including Trump, heavily invested. Yep. And this is why you have all those laws that has been favoring the crypto market, including all what we call, this the tokenization of finance, which is a huge topic, where you have those, you basically, just to make it short, Bitcoin is storage value, but then you have also those tools that are part of the tokenization. I'm talking the main ones are Ethereum and Solana. So they want to tokenize the whole economy. So that's anything can be tokenized in the future. A building could be linked to blockchain, and basically you can split the value of the building within that blockchain. But ultimately, what is behind this is CBDC. We go back to CBDC, total control of assets, and basically you can seize, you can do whatever you want. And actually, this could be tied to a social credit system. That's a huge topic, extremely huge. But what happens is that I have the impression that the US is betting on two things. I think not only there's a crypto thing, and also they're also hedging somehow their bets on the gold too. So, and on the other side, you have the multipolar world with BRICS that are heavily investing into those new system of currency, payment, and so on, but backed by gold. To give you a single example, China has created what we call the Golden Corridor, and not many are actually covering this. This is massive, absolutely massive. Let's say they build vaults around the world. Let's say in Saudi Arabia, there's a vault where the Shanghai Gold Exchange, they put their gold there. And how does it work? Well, China can deal with RMB. And if Saudi Arabia, they have RMBs because they bought, they sold oil, and China gave them RMB. Well, anytime they can go into the vaults that is inside Saudi Arabia and exchange that against gold, as opposed to the US. In the early days, $1 was tied, to gold. In the early days, there was a promise on delivering a certain amount of gold against $1. Then they broke in 1971. Nixon said, well, it's no more tied. It was actually de facto default on the dollar. If you really want to go into details, a default on the dollar. and that's it became a completely fiat currency. It's like I owe you, but it's based on trust, but nothing tangible. Now China, now what it does, as opposed to the US, they say, in the worst case, we have golds, vaults can always, we can always give you golds. We don't even know how much the US has. Now China, imagine what they do in terms of trust. They say, you can deal with us and use our currency, but anytime the gold is not in our vault, it's in your own country. So Shanghai Gold Exchange, they're building many, many vaults around the world. And that's what we call the Golden Corridor. And it makes de facto Chinese currency like, a convertible currency. It's extremely attractive. And in addition to that, I simplify that, but what I'm saying is that this is within the process of de-dollarization. China is giving options, and within BRICS, they're finding solutions to bypass the US dollar, because the US dollar is being weaponized, using US dollar for sanctions. They're bypassing by having many ways of transactions. One is the goal, but they have many ways now to have a clearing system between all those countries. And you don't need to join BRICS. Whoever wants to join into that payment system can.
It is extraordinary. We have many options to try to get away from the dollar. Crypto is, I understand the importance of it, and I understand why people move into it. I mean, if I was in Venezuela and if I was in Argentina right now, yes, I would probably go into full crypto. But at the end of the day, there's not one person that can hold their hand up and say everything is guaranteed. I'll give you an example. We've seen scams in the mining industry before. I think Canada was famous for a couple. One was I think it was called a company called Briax, where it said it had a major find in Indonesia, and it was the largest gold, and they went there and twinned the holes and found out that there was no gold there. I mean, we could wake up one morning and maybe see some of these crypto companies completely go dark, or maybe this was, a CIA engineered product. I mean, I'm a person that, and the reason why I'm in silver, the reason why I'm in gold, the reason why I'm in a lot of these things is, you can hold it, you can touch it. But there is, an area of, I guess, a person will feel a little bit uncomfortable when they can't really physically hold something sometimes. And for the younger audience, they would say, oh, what are you talking about? I can look at my phone. The money's on my phone. It's no problem. Well, it's no problem until it's no problem or a problem. And we have seen so many things happen here in the last few years here, with what's going on with, Mr. Epstein and a lot of his characters, band of brothers. It really does give a person a really insecure feeling when it comes to investment. Like we could say, the housing market, safest houses, no problem. Well, 2008 came along and wiped out a lot of people with that. Then you could say, well, okay, what's next? Okay. So we've seen a lot of scams, a lot of things go on. We've seen the financial markets. I mean, what on earth is the S&P 500 doing up around 7,000 points? It doesn't deserve to be there. I mean, a lot of these companies are phantom companies that are trading on the S&P. They don't justify it. You see, I'll give you an example. What if you bet the bank on Meta with Mark Zuckerberg? I mean, how much money did he blow through on that to find out that there was nothing on the other side? So it's these kind of things where I think we haven't seen anything yet on these metals. I think that people are waking up saying, you know what, the geopolitical stuff could get out of hand. And I was on a live stream last night where they we were chatting, but I really didn't have the opportunity to express my feelings. If the Trump administration decides to go into Greenland, for some bizarre reason, if they want Greenland, they can. I mean, if they want to take it by force, they can take it by force. I don't know. I disagree with it. But it may come to a point where the Russians might be the people that save the day, even though they've been demonized by everybody around the world. I think when I saw that missile, that Reznik missile slam into Kiev a few days ago and researched it and saw a missile that goes out of orbit, out into space, flips around, turns back down, and cruises at 12,800 kilometers in a total free fall, splits into 6, then splits into 36, then lands into 5 or 6 different districts, and everybody goes, what on earth was that? Well, that is an Reznik, and you ain't going to stop that. And that's where I think the Russians and the Americans, there's going to be a problem here, and it's going to be faster than you can imagine. And I think if we get into that, then all hell's going to break loose.
No, absolutely. I would say, just going back to the topic of cryptocurrency, I think it's important to understand the technicality of it, and then the fact that the US is betting on this. And I think what is behind this, there's a sort of story which is the recycling of US debt through stable coins. You see, now you have, and they're bypassing the federal bank in terms of creating money. So I would say this is also one topic where you have the US that, and I think it's a kind of a smart move somehow. Smart, how can I call it? Where you have $200 billion that actually have been recycled into stable coins. And who's using those stable coins is actually many countries outside the US that are using that. And basically this is recycled US debt. And I would say the danger behind this is this, there could be a debasement over time. See, because this is not controlled by the Fed. Those are private institutions, and that's extremely risky. So I would say
we've seen it happen. We saw it happen a few times. Some of these stable coins, and when people start asking questions on, okay, well, who's holding the actual currency behind these stable coins? No bank is putting their hand up.
No.
Just look at Bitfinex. They will not say on record where their financial institutions are that are hedging one-to-one Tether, like Tether, right? You know Tether.
Yeah,
right?
Absolutely.
Okay, so who's running the bank accounts?
That's absolutely crazy. So basically, what they do, they issue stable coin, but they buy US bonds, short-term US bonds. So those companies are private entities. They are allowed to create stable coins, and they get revenues from the bonds. And you know what they buy? They buy gold. They still buy. So basically, they are actually still betting on gold, and basically they have a free lunch, zero risk. And this is a way.
I get it. Yeah, I get it until I get it. The issue is at any time, anybody could pull the rug on those banks.
Absolutely.
And let's say those banks might not be in big jurisdictions like Switzerland. Okay, they might not be in Liechtenstein or Luxembourg or Monaco or anything like that. They might be in the Cayman Islands, the Turks and Caicos, that has maybe, a population of 40,000, 10 banks. All the Americans got to do is just say, you know what, guys? Those are US dollar currencies. Your bank belongs with a SWIFT code. Boom, we're taking it. And it's over. But it's that easy. That's what I'm saying. You are one phone call away from locking down. So, and this whole thing about, like, don't get me wrong, I admire the crypto market, and I understand the crypto market. Trust me. But until somebody puts the CEO, the CFO, and the COO of Bitcoin up on the stage, for me, there is always a little, and I own Bitcoin, I own Ethereum, I own a few of these. But okay, hear me out on this. You know MicroStrategy?
Yeah, no, it's a Ponzi scheme.
do you know MicroStrategy? Do you know it?
Well, extremely highly leveraged and very close friends of Trump.
Okay, but do you know MicroStrategy, right? You've heard about
Yeah.
these guys?
Yeah.
Okay, so they get about 3 to 3.5% of Bitcoin, right, on their books, right? No, if you're not aware of them, I just want to.
No, I didn't know but it's extremely highly leveraged.
So I'm gonna just pull up MicroStrategy's stock chart, and I'm gonna run you through something here. Okay, and you're a smart finance guy, so okay. So MicroStrategies is trading at 157.33 dollars per share. Okay, and they have approximately 3 to 4% of total outstanding Bitcoin. Okay, now they say on their books they are holding, and you're a smart finance guy, so follow me on this, and you're going to be shocked where this goes. Okay. MicroStrategy saying they're holding between 50 to 60 billion dollars worth of Bitcoin, right?
Yes.
Okay. Well, the current market cap of that company is 45 billion. So if they're holding 50 to 60 billion or 3% of Bitcoin, and their stock is trading at 45.6 billion, it should be a bargain, you would think, right? You'd say, well, Jesus, it's trading under its asset value by at least 10% premium. What a great company to get into. The issue is the brains behind this company decided to put out a preferred dividend. Now, that cannot be canceled. Preferred dividends can't be canceled. And they're paying back, as you say, use the word Ponzi scheme, but they're paying back between 800 million to 1 billion every, let's say, 12 to 14 months on dividends back. So they got to make about $1 billion. So if the price of Bitcoin goes up, the song and dance can continue. Okay, no problem. Well, here's the issue. Wall Street knows this. The eagles are circling. And when I heard the other day that they're shopping around for a private investment in public equity, they're called pipes. I remember pipe deals from my own market days when I was in Vancouver in the stock market days. Pipe deals are this. They're like this. They're going to walk into MicroStrategy and they're going to say, hey, boys, you need some cash? MicroStrategy, hell yeah, we need lots of money. Okay, how much do you need? 500 million, a million, a billion? What do you need? Okay, well, let's do $1 billion. Okay, well, we'll take it in convertible. Not a private placement, but we'll take it as a convertible investment. Mm-hmm. Now that means when the share price falls, the more shares that go to the finance. It's
preferential.
Right?
They get the money before the shareholder. So basically, it's whenever you have a debt, it's like who gets first the money. If it's if they dissolve MicroStrategy, the first is going to be those preferential debt holders.
So yes, there's financings going into this company right now, but as the price goes down, and then when the boys decide to convert it, they will inflate the float. The price will soften again. And then it's a vicious circle. Now that MicroStrategy is saying, shit, we need more money. The pipe guys will come knocking again and go, let's do another $500 million and convert it. They run it again. Price goes down again. Price softens. Then they're like, shit, unless Bitcoin's going up to 200 to 300,000, a coin, they're going to have to start selling their Bitcoin. And when the market starts to hear that the third largest shareholder of Bitcoin in the world, they're going to liquidate. So here's what happens is MicroStrategy, they're financing this thing in a debt spiral because they want this company to be worth nothing, because if they bankrupt it fast enough, they can steal 50 billion in Bitcoin. So they don't care about the company. And if they smash MicroStrategies down to under $100 and that thing free falls, Who gives a shit? The stock might only have maybe in a year's time 5 billion in market cap, but hold a 50 billion asset. So guess what happens? The faster they bankrupt it, the faster they get their hands on the coin. So this thing, it's dead on arrival. It's in big, big trouble. And all eyes are on MicroStrategy. And I'm telling you now, man, that thing, I'm short it. I'm short, big on it. So just look at the chart. I don't know if you can, I'll just give you an example of July of last year. It traded at 403. And now it's down to 157. So the market, the vultures are out, Angelo. even if you want to make money on Bitcoin, and I get it. I get Bitcoin. I totally understand it. And I think it's an amazing if we don't have crooks and thieves in it.
No,
but
absolutely.
When you have crooks and thieves, this is and I'm not saying MicroStrategy is doing anything wrong at all. I think MicroStrategy is probably has all the best intentions of the world. And most of the shareholders that got into that earlier have done well. But word on the street is the finance boys are circling the barrels and the wagons and saying, hey, man, these boys need some cash. And the sharks smell blood, and they'll give the money to these boys. Just keep an eye on MicroStrategy's. See if they do a pipe finance, and if they do, look out. It's dead on arrival. I think they're in big trouble. Anyway, go ahead.
No, but I would say in those times of troubles, we are living some kind of reset. I don't know how the reset is going to be, this setup, this reset is going to happen. But I would say it goes back to very simple strategy. Physical, let me repeat, physical. You need to be obsessed about physical, and you need to be extremely careful about the cash. The cash is actually, when you look at gold, everybody's saying that gold is going up. Actually, it's not gold going up. It's the value of your currency that is going down. That's how I see it. Because it's
Angelo, I got a question for you. Sorry to interrupt. If somebody wants to buy physical silver, where can they buy it and get it delivered? Put it under the bed. Where is that possible? I know I purchased mine by UBS. They send me 10-gram little bars in the post. Do you have boy, oh boy, we need to get you attached to a company where you can tell people, because people are going to want to buy this soon.
Well, I would say UBS does, and I think the service very reliable. So basically, you buy, I think it's K2 Gold, right? The system is K2 Gold. So you can buy it online and you can choose, but it's supposed to be backed by gold, which is in the vault. But if you want to have the options of having that gold to be delivered in your home, then you can get it. And that's through the app. It's very simple. And I guess that's what you're using. When it comes to silver, I didn't know actually that the UBS would do that. In my case, I entered into the silver market only recently. It's not, a bit more than a month. And the quick option is to buy miners. And the advantage of miners, if you are very bullish on silver, the torque, the leverage is much higher. So let's say, because it's a 1% of increase in silver, the impact on the company is going to be much more, because it's because of the margins going to be much higher. So what happens is that maybe 1% of the increase in silver price would be translated into maybe 2 to 3% in the price of the mining company. Now, within the mining companies, you have some that are very mature, that they've been running the company for a while, and it's very stable. And I would say the riskier one are the junior one, where you have even more leverage. So if you want to have exposure, this is going to be always better than silver paper, based on paper, if you don't have the option. And if you are less risk averse, mining stock, and you see the performance of mining stock is just mind blowing. And I
used to live in Vancouver. Yeah, that's a mining city. The good old Vancouver Stock Exchange. Now it's the Toronto Venture Exchange. I think Eric Sprott did a nice video recently about silver too, talking about miners, just like you're talking about the companies.
I think we live in unique times. Again, I don't want you. This video is the purpose is an education purpose. We're not advising people to invest into, just as a disclaimer. But I would say we're living in a very interesting time. This, it's very rare that you're in. There's what is happening right now. There's a huge shortage. There's a open, very transparent arbitrage to be done. It's very clear. It's when is the last time where you had such a discrepancy between the spot market and
you spoke about the Shanghai Gold Exchange. I mean, a lot of these exchanges are digital. I mean, is that a physical exchange where you can walk into and actually purchase gold, or is it just tradable on the market?
We need to be extremely careful. I wouldn't be surprised. There's some rumors that even there's so much demand that even in Asian markets now you have some shortages when it comes to deliverable of silver.
Well, I'm hearing it's trading over 100 in China.
Yeah, it's over 100. But there's a premium for a reason. Why would people buy at a higher price for having the gold delivered now or silver being delivered now as opposed to have a paper? Because it's very clear. People don't trust the paper, and I would say what could happen. I would say the paper needs to catch up. Otherwise, it doesn't make any sense. But I would say we need to be extremely careful. Even within Asia, there's so much demand, and especially when it comes to silver, that there's going to be a shortage. It's just a problem of the output from the mining and refineries. They have probably bottlenecks out there. You need to check where is the bottleneck. I don't know exactly if it's refinery and so on, but the demand is so much, but the output is less than the demand. Well, you have even industrial companies. You see, let's say if you are Samsung, what the price sensitivity, it's what we call this concept of elasticity of price. You see, it's those guys. If the price goes up by 10%, they'll buy it. They'll buy it 10% more because it's
silver's in everything.
But they're not sensitive. The thing is that because it's part of their business. So Samsung, even if the silver goes double up, but they're still gonna have to have the physical silver because otherwise they need to stop the production. So a lot of those companies will have no choice but to get the delivery. So and they pay whatever is needed. So this is why it wouldn't be surprising that silver goes up to 300, even 400, because if there is no supply, it's going to be the one that bets the highest price. I mean, as simple as that. I mean, this is not rocket science, finance. This is very simple stuff. Those guys, it's elasticity of price. It's like
totally agree with you.
It's the same as salt. Salt. It doesn't matter if salt. Let's say if salt is at $1 now. Well, if the salt is at $10, you're still going to buy your salt. It doesn't matter. You are not price sensitive. Silver is the same. Industry needs it, and you need to buy it.
And when we saw Bitcoin, when we thought Bitcoin was expensive at $5, and now it's 80,000. I mean, guys, silver is.
Yeah. It's just you can't. Well, this is the logic. The physical logic there is just that simple, really. And you can see the price has been suppressed for a long time. I just want to go back to history. This is extremely important. When I'm shooting some prices which are a bit crazy for people, like how can it do like 5 times 5 within 5 years? Well, just to give you an idea, from 1970 to 1980, the price of silver did times 1700% times 17. We are in one of those times. It is possible that we might have within a period of 10, 15 years, the same scenario of doing, silver doing times 10 or 15. If everything stays the same, you are in the same dynamic, and there's so much demand. It's also the industries that there's more demands. Solar panel, major industrial complex, there's more demand. The output is still there, and lots of those new mines. When you find new mine, well, from the time you find it to the time that we are extracting, the silver, it takes a long time. So the supply needs to adapt. There's so much demand, but this, the supply is not there. And what happened? Supply demand. No, the price goes up and up. And also, we
Wow.
are also living, in addition to that, keep in mind that a lot of countries are still using silver as an option of maintaining value. It's being used, it's a dual usage as opposed to gold. Gold is a very little when it comes to industrial usage. It's more like maintaining value. Silver has the two sides, and this is why right now it goes up much higher, because the need is not only storage value, is industrial need.
Fantastic. Angelo, we could talk forever, buddy, but I appreciate it. I hear you got a big show coming up. I think you can announce it here if you want. Tell everybody where they can find you.
So you can find me on the YouTube, Angelo Giuliano. I'm just not as active as you on YouTube, Angelo Giuliano. I'm more active on Twitter. I post stuff on Geopolitics, but you can find Angelo in China in one word. And always glad to provide some content, and I randomly touch upon finance, but finance is where, you and I, that's where we come from. So it's always good to go back to our roots.
Well, good to see you. This weekend coming up, I'll be in Bangkok. I'll be meeting a lot of YouTubers. If you're in Thailand on the weekend, give me a call. I'll be there with Neil McCoy Roy. He's a big geopolitical guy from the United Kingdom. And apparently another 10 YouTubers and crypto guys are coming into Bangkok on the weekend. So if you can slide over, Angelo, be great to see you. I'm flying there Friday and I'll be there till Monday. But what a pleasure to have you on the program. Stay safe, sir, and have yourself an amazing interview coming up. I'll keep that a secret. But anyway, talk soon, my friend. Take care.